Loan deferral customers in stress. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Got my morning stein of coffee, and I thought we'd have a look at this article from the Fin Review sent to me by a viewer, discussing home loan deferral customers in strife or in stress. Now, data from the RBA from a while back now, but it did show an increase in those in home loan arrears, particularly in WA and Northern Territory. Earlier today we looked at, or maybe later today when I released the video, we looked at changing payroll data and how, well, payroll has taken a hit, particularly in the mining sector. By that I mean wages, actual wages that people receive on a week-to-week basis. So how's that going to play out for people who are potentially in negative equity, and maybe they've taken a mortgage holiday, they're doing whatever they can to scrape money together? It's going to be a mess. It is really going to be a mess. There's calls to remove all of these stimulus measures that are propping up the economy, that are probably helping some zombie companies and artificially reducing the number of people that are unemployed. Right now, this is the ABS data, about 6.2. You've also got the Roy Morgan data, and I'm only interested in the combined unemployment and underemployment. There we're sitting at about 25% of the workforce. Now, a big proportion of the job losses that have happened just recently, up to now, a big chunk of them were actually from secondary jobs. They were from secondary jobs. A lot of people have had to have two jobs, about 6% of the workforce. Now that's down to about 4%. Just hopefully to get ahead, not just to make ends meet. Hopefully they can absorb the loss of that job. But somehow, I don't think that's reality, and I'm probably being overly optimistic. So the fact that we're losing these support mechanisms, wages are growing down, we're in a recession, and the government's admitting to it and predicting years of struggle to get right back to where we are or where we were. I think we're going to see a lot of people come September to February, that period after these mortgage holidays are withdrawn and these support mechanisms are withdrawn, are going to be in trouble. They're going to be in a lot of stress. So consumer confidence may be rising, but the country's big banks suspect about 96,000 home loan borrowers who asked for a 6-month loan deferral are facing financial difficulties. Well, bloody hell, you'd have to if you're doing that, because you're just putting off your debt for longer. We saw an article in the ABC a few days ago. Two professional couples, probably at risk of having to be forced to sell their home because they couldn't keep it. You know, project managers earn really good money. There should be no excuse for them not to have a nest egg, not to have emergency funds to keep going. So major banks are bracing for a savage increase in problems in their massive mortgage portfolio after preliminary investigations suggested up to 1 in 5 home loan borrowers who have asked for a repayment holiday during the pandemic crisis are in deep financial strife. According to the Australian Banking Association, banks granted home loan deferrals to 480,000 customers whose total borrowing came to 173,000. I mean, that's terrifying. Nearly 500,000 borrowers. 500,000. People, I'm sure some people would take advantage of it to build up a reserve. You know, maybe they're using this to build up a nest egg so they can ride it out under the expectation that things will improve next year and they can keep going, I guess. And that's the price you pay, is just putting off the extra cost of that loan, because the money in the home loan's cheaper than other sources of money, cheaper than your credit card. Maybe they're doing this to pay off their credit card, to get ahead on other things. That could be it too. That would be a smart move. It's a way of consolidating your debt without having to go through the pain. So we'll see. So this suggests that some 96,000 borrowers with mortgages worth almost $35 billion will end up in the bank's intensive care units. In March, the country's largest home lenders allowed borrowers who had been thrown into financial stress by the pandemic to defer their mortgages for up to 6 months. The major banks have already begun the process of contacting these customers to see whether they would like to begin loan repayments, with a particular emphasis on the 20% who are believed to be in financial difficulty. They're the ones who have given us the greatest concern, said one banker. These borrowers have typically lost their job as a result of the pandemic, which means they no longer earn enough income to meet their mortgage repayments. Not only will they definitely need the full 6-month deferral on loan repayments, but bankers have begun speaking to them to see whether they need to extend their loan repayment holiday by a further 1, 3, or even 6 months. Wow. When we look into data, we can see where there's been a lot of primary salaries, one banker said. But that doesn't take into account that someone else in the household may have additional income going into an account with another financial institution. So better forbearance for homeowners. Banks are also running through the loan repayment options available with customers. For instance, if borrowers can no longer afford to repay a standard principal and interest loan, it could be better for them to switch to an interest-only loan. I mean, this is pulling out every trick they can to keep people in their homes, keep people in their mortgage, which is understandable. People will do whatever they can, but going interest-only, I mean, that's the hope that things return, you find other options. Maybe it's all someone needs, 6 months window of interest only, just to keep everything running, keep the stability there in the family, so you can get another job, create something else. That could be the option too. But the fact that they're looking at these things just screams to me lack of confidence and concern. We're going to start seeing some forced sales. It's going to have to happen. And with that will come edge cases of property, and it'll creep down. I think the bank will do everything they can, though, to slow that process, to manage that process, to avoid that pain, because these houses are their assets. So similarly, those who are paying a mortgage rate of, say, 3.5% may want to take advantage of ultra-low interest rates and switch to a fixed-rate mortgage of about 2.2%. Bankers are also reporting that home loans for investment properties are performing as well, if not better, than loans to owner-occupiers. Still, banks are inclined to show the greatest forbearance to people who have borrowed to buy a property which is their primary residence and who have lost their job during the pandemic. Where there are people with 3 or 4 investment loans, we're starting to have a conversation to them about whether selling a property or 2, one banker said. And this is where we saw the example of the teacher with 6 investment properties who thought he was going to be a millionaire and has just been paying interest only and hoping on capital growth, negative gearing it. So you'll have people that are going to be selling those properties. And this is the question of if it'll be a forced sale, they'll have to be pushed to move it, then those will be edge cases that will affect the price of property too, everywhere. Remember, it's the last price in your street that affects the evaluation, the last price in your suburb. Bankers believe these steps they're taking now to contact borrowers in financial strife mean that fears of the property market teetering on the edge of a cliff when the 6-month holiday expires are exaggerated. Instead, bankers emphasized they were prepared to keep people in their homes after September and into 2021 rather than force them to sell. Okay, so this is interesting. If the banks are preparing for this and they put money aside, that may mean we may not have to see the forced sales that people are predicting, and we may not get the crashes that people are anticipating. What do you think about that one, everyone? What do you think? Do you think the money that the banks, and they've set huge chunks of money aside for this, we've seen that in the reporting, do you think that's going to be enough? After all, it isn't in the interest of banks or borrowers for a flood of distressed properties to come on the market. At the other end of the spectrum, about 20% of customers who asked for a deferral on their loan repayments have continued to either make their regular loan repayments in full or in part, suggesting they may be in better shape than anticipated. Banks are contacting this cohort of customers and asked if they would like to continue deferring their loan repayments, especially since capitalizing repayment stretches out the term of the loan. And the author of the article owns shares in the major banks, which is frankly not surprising here in Australia. Not surprising at all in Australia. So there we have it, everyone. 1 in 5 home loan deferral customers in strife, and the banks preparing to do whatever they can to prop them up, to keep them going. What do you think? Do you think the banks keeping these people in homes, doing whatever they can, do you think that will avoid edge cases driving down the property values in Australia? What do you think? Let me know your thoughts and opinions in the comments below, everyone. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care. I'll see you next time.